Joined now by Michelle Girard, Managing Director and Chief U.S. Economist at NatWest Markets. Michelle, I'm wondering if you could at least just first give us your thoughts that you saw in the report, better than expected, but a dip from July's report.
Yeah, it was actually even a touch weaker than what we had anticipated, but it was in line with the consensus. And honestly, I mean, it sounds crazy to say, but whether you gain 1.3 million jobs or 1.6 million jobs, I mean, these numbers are so huge. And when you think about it in the context of the jobs that were lost, you know, we still have to make up over 11.5 million jobs to get back to where we were in February. So if we're a couple 100,000 closer or further from that goal, you get a sense of really how small that little discrepancy really is in terms of the actual report. I mean, it's good news, and the unemployment rate came down. We are making headway. It just we are reminded month after month. It's going to take a while for us to. I mean, it's going to take, I think, longer than maybe people want to believe. It could be well into the end of next year before we start getting back to an employment situation that was, you know, a lot closer to where we were before the virus outbreak.
I'm wondering what your expectations are going forward, at least on the jobs front, especially as we're seeing some states try to reopen schools. That, of course, means moms and dads can hopefully go back to work. What are your expectations for September, October, November, into the end of the year?
You know, it's going to be, we're sort of watching how this all unfolds. As you said, the schools are going to hopefully reopen in many places, and that will perhaps allow parents to head back to work more easily. But at the same time, it of course raises the risk that we'll see the infection rates start to rise again, and that any reopenings might prove short-lived. So that's something I think we've got to watch. I will say, and I don't mean to sound so negative. I feel like I'm being so negative. I mean, the other thing that we're watching, of course, is you are starting to see announcements. We saw it from a number of airlines announcing that they are going to be permanently furloughing workers. And this is another thing that I'm watching, is as we see companies beginning to look ahead to the post-COVID world and beginning to think, you know, we aren't going to need as many workers as we had before, then those workers that were on temporary layoff or furlough might actually not be rehired. And again, we're starting to see some headlines along those lines, which, you know, again, would suggest that it isn't going to be so quick for us to get back to where we were before. So I still think, even though the news is showing improvement, you know, it's still going to be some slow going before we actually feel like we're over the hump, if you will, in terms of the COVID impact.
I hope that this is not going to keep the negative train going, Michelle. But I want to ask you this. We, of course, saw a dip in August's numbers compared to what we saw in July. And I saw a headline somewhere, and I tried to find it again, and I couldn't, admittedly. But I'm just going to throw it out there to you. I saw a headline that was saying that, at least when it comes to the jobs recovery, that it is reaching a point of exhaustion. I'm wondering if you see it, if you are that negative, or perhaps that's a little bit too pessimistic.
Yeah, I think that's too pessimistic. I mean, there is a natural settling out, if you will. And this is, you know, kind of when you look at all of the statistics, you saw a big hit as the economy was essentially brought to a standstill. And as things reopen, understandably, you get a very quick snapback. And so we saw very strong numbers in the summer, whether it's employment or retail sales. I mean, there was just this unleashing of pent-up activity, which naturally occurs when you've gone from doing next to nothing for a couple of months. And then very naturally, it does level out. So this is kind of one of the things we had talked about in the summer, where you had those explosive gains at first, and we kept cautioning, it's not going to stay like this. You know, the gains will become more hard-won. And that's what we're seeing now. So I wouldn't read too much into the fact that the pace of gain is slowing. That's natural. Let's keep it positive. The most important thing is we are still seeing gains. If month after month we can add 1 million or 1.5 million workers, again, then by the end of, or even let's say the end of next summer, we would be back to where we were, you know, in February. So, you know, this is not a bad pace. If we can keep this pace up, that would actually be a positive surprise, as I said, from a scenario where it could take even longer to get back to pre-virus levels.
Now, Michelle, at the top of the show, I did not talk about stimulus because there is no news on stimulus. I had been trying every day to give some sort of update, and it just seems the negotiations are completely stalled. Of course, this means no stimulus. We're not going to get any boost in unemployment. Actually, that was handled by the president's executive order, but we're at least not seeing any help for small businesses. And that, of course, is going to impact the amount of companies that are going to be able to bring back some workers into the fold. So without that stimulus negotiations settled, do you think that we're going to see the jobs recovery continue to either slow down or perhaps start to flatline?
I think it depends so much on how the economy progresses from here. It is disappointing that we haven't seen more action, and there is a risk. We've talked about the fact that so much stimulus in the U.S., thankfully, was very quickly, put out there. It was sort of front end loaded, and now, those benefits, the checks are out, the unemployment, the extra boost to unemployment benefits has been trimmed, and there is concern that as that stimulus sort of fades, that you'll see the economy lose momentum. Of course, if we get through the fall and the infection rates are able to stay controlled, or even more importantly, hospitalization and mortality rates stay low, and we can actually see people getting more and more comfortable in living with the virus and being willing to go out, even in the fall and winter, willing to spend. If businesses are confident about the economic outlook, the need for that stimulus as a bridge is reduced. So really, the importance of stimulus is going to depend so much on how the economy fares over the coming months, and a lot of that will be tied to, sort of how the pattern for the virus goes, between now and let's say November.
I'm wondering what else you're seeing as potential risks to the recovery going forward.
Well, the other thing I think that we're, sort of watching away from, all of the news around the virus is, of course, what the longer term impacts might be, for example, on the inflation rate, because ironically, while you would think that the pullback in demand associated with the virus outbreak has put downward pressure on prices, as capacity is coming out, like airlines are cutting back on flights. It's giving some pricing power in some areas, and we're seeing actually prices in some places firm a bit, and that would be something I think I'm keeping my eye on. Most people assume inflation isn't going to be a problem. The Fed is desperate to get it up, not down, but that would be something. And the reason I say that is because higher inflation, or fears of it, will lead to higher interest rates in the long end of the market, like 10-year yields, which mortgage rates are tied to, will rise. And higher interest rates in the market would undermine the equity market. And of course, that would be all around, I think, a very negative development. So I am watchful of kind of the inflation and the level of market interest rates, like as the 10-year yields is, if that's been moving up, if that continues to move up, that could create some concerns.
All right, Michelle Girard, Managing Director and Chief U.S. Economist at NatWest Markets. Always good talking to you. Thanks for joining us today.
Again.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.